Carl Icahn is one of the world's top investors and is considered one of the first activist shareholders. In this video, I'm going to take you inside his portfolio, highlighting his most recent buys and sells with some background on the companies. After all, the easiest way to become a better investor is to follow the best in the world at it. Hello, this is Investor Watch with another episode giving you an inside look at a top investor's equity portfolio. In the next 9 minutes you'll get some background on Carl Icahn. What's his investment philosophy? Then, what are the biggest holdings? Then the only stock that is brand new to his portfolio. Then the one existing stock he's been aggressively adding recently. Then the 2 companies he's actively removing from his portfolio. After that, we'll analyze what he's doing on an industry basis to see what it's telling us about the economy, these companies, and more. Icahn began acquiring large portions of companies in the 1970s, and he would typically buy enough to have sway with other shareholders, and then force a sale to another company. He successfully doubled his money multiple times in very short periods of time with this method. In the 80s, this practice got him known as a corporate raider, but now he focuses on taking over companies to improve them. This is usually accomplished through changes in their corporate policy. Some well-known companies he's owned large stakes in include TGA, Nabisco, Texaco, Marvel Comics, Time Warner, Blockbuster, Yahoo, Netflix, Clorox, Hertz, and Apple. Last year, Icahn was listed 97th on Forbes' list of wealthiest billionaires. His investment philosophy, as he himself has stated, is to buy something when no one wants it. Thus, as a contrarian investor, he identifies stocks that have a low price-to-earnings ratio or with values that exceed the current market valuation. This philosophy has earned him a personal net worth of $24.4 billion. Now let's take a look at his top holdings. By far, almost 70% of his fund is invested in IEP or Icahn Enterprises. The company is owned 88% by Icahn himself and has investments in various industries, including energy, automotive, food packaging, metals, real estate, and home fashion. Since we want to see what other companies he's invested in, I've removed Icahn's businesses from his portfolio here. Here are his biggest holdings with IEP removed. The largest position is CVR Energy or CVI at 10.26%. Then First Energy Corp or FE at 3.66%. Next is Occidental Petroleum or OXY at 3.11%. Next is Kaiserox Holdings Corp or XRX at 2.3%. Herc Holdings Inc. or HRI at 2.24%. Newell Brand Stock or Endovel at 1.99%. Southwest Gas Holdings or SWX at 1.88%. And last is Bosch Health Companies or BHC at 1%. Financially, the 2 best seem to be CVR Energy and Herc Holdings, which both have positive tangible book numbers, rate of returns, and earnings yield. Just below them, I would put Kaiserox Holdings and Newell Brands. Both of them have a positive book number, but a mixed rate of returns and earnings yields. First, let's look at the stocks Icahn has been buying. And the only new company he has added to his portfolio over the last 6 months is Crown Holdings. This is one of the world's largest producers of metal packaging. The company manufactures beverage cans, metal food cans, and closures as well as aerosol cans. With the purchase of Signode, the company also has a presence in a wide variety of protective transport packaging. With a market cap of $9.45 billion, a PE ratio of 13.22, an industry average of 13.24, and a Shiller PE ratio of 24.97. In fact, the PB and PE ratios are close to 2- and 5-year lows and is rated as significantly undervalued. One warning sign is their operating margin has been declining as a result of increasing debt obligations since 2019. Zacks.com rates Crown Holdings stock a 4 out of 5 to sell. Its industry rank is in the bottom 6%, 235 out of 250 industries. Icahn makes his living buying beaten-up stocks, and this industry certainly fits the bill. Next to the stock Icahn has most aggressively been adding to his existing position, Southwest Gas. Southwest Gas, in March alone, he increased his position 35.28%. This is a utility company primarily engaged in the purchasing, distributing, and transporting of natural gas in the American Southwest. It has a market cap of $4.32 billion. A PE ratio of 15.05 with an industry average PE ratio of 16.7. A Shiller PE ratio of 17.56. Analysts rate this company as being very undervalued right now. However, it may be a value trap. Southwest Gas represents 2.17% of Icon's portfolio. He owns 9.68 million shares at an average price of $72.27. Icon began purchasing Southwest Gas in the third quarter of 2021 and has steadily increased his position. Classified as an expert in energy stocks, Icon may be onto something here as it's got an attractive PE ratio in a reliable industry. Maybe Icon is calling this the bottom of the natural gas prices. Next, let's look at what Icon has been selling. Icon's sells include Herc Holdings, which he's been selling consistently over the last year and has lowered his position by 8.11%. Newell Brands, Cheniere Energy. Twitter he completely sold out of. I remember seeing him discuss this. His Twitter trade was a short-term position based on the Musk's potential and eventual purchase of the company. He did very well on it. Let's look at the two companies he's been selling the most of: Herc Holdings and Newell Brands. Herc Holdings is an equipment rental company that was spun out of Hertz Global in 2016. It is currently the third largest equipment rental company, 4% market share in North America, after United Rentals and Sunbelt Rentals, with a fleet size of $5.4 billion. It serves commercial and residential construction customers, the environmental sector, industrial entities, and entertainment production companies. Here are the top-level numbers. With a market cap of $3.25 billion, a PE ratio 10.19, an industry average PE ratio of 16.24, a Shiller PE ratio of 24.44. This stock has also outperformed by a wide margin the last 2 years compared to its direct competitors. Air Lease Corp, symbol AL, and Ryder System Inc., symbol R. Despite analysts rating this stock as undervalued, Icon continues selling large portions of this company. This could indicate the stock is overvalued, as it certainly looks it compared to its competitors, or that a business slowdown is coming. Next is Newell Brands. Newell Brands Inc. is an American global consumer goods company, operating in 5 segments: commercial solutions, home appliances, home solutions, learning and development, outdoor, and recreation. The learning and development segment generates most of the revenue. Some numbers. A market cap $4.81 billion. A PE ratio of 22.8. Industry average PE ratio of 17.58. A Shiller PE ratio of 22.8. One cause for alarm is the dividend payout ratio has ballooned in the last 12 months. This may be due to taking on debt. I think this sell indicates a problem with the company specifically. If you're thinking of investing in Newell, take a close look at their financials and listen to their earnings calls for solutions to the problems they are facing. Looking at Icon's most recent trades by industry, we can see that he's buying into commercial packaging, adding to utilities and natural gas, and reducing consumer packaged goods and business services. Now my personal conclusions from doing this analysis are just that, my opinions, but what Icon's moves may be saying about the market. First, natural gas prices have bottomed. With his large purchases of Southwest Gas, I believe he thinks the bottom is in. It's still trading at a lower price than Icon's average. If he's right about the company's long-term performance, you could get in now and have bigger returns than Icon. Buying materials with Crown Holdings is a bullish move as materials do well in early-stage bull markets. The company has strong profits, decent growth potential, and could be a bargain if they have a plan to control their operating margins and debt. Newell has, potentially, financial issues. If Icon himself won't basement shop on this one, then you're best to stay as far away as possible. That wraps up this video. Thank you for watching. I hope it's given you some new industries and or companies to look into for your own portfolio. If you liked this video and want to see inside more investors' portfolios, just hit the subscribe button. Carl